Hey, welcome to the Mortgage Minute for the end of August, and wow, what an amazing couple of weeks has been, highlighted and dominated by the impact of what's going on in China. And of course, China blinks. The bottom line is China has devalued their yuan, and the stock markets around, not just in China, around the world react to this. So what I want to talk to you today about is my role as a wealth advisor, a holistic approach to your entire wealth management, including your real estate and your non-real estate holdings, because a lot of people ask me about diversification and what should I diversify in. Interestingly enough, a lot of financial planners will talk about diversification within a stock portfolio, but what's interesting is, as a direct result of what happened in China 2 weeks ago, the stock markets around the globe, regardless of how diversified you are within that stock market, virtually crashed. Just look at some of the headlines. Now, I'm going to run through some headlines real quickly here. I'm not asking you to read them, but just to really to illustrate how much of an impact an event in China could have on not just global markets, but the consumer psyche, because you want to think about this. It's amazing if you think about the average consumer, and I mean by that investor as well, how are they impacted by the media, and in particular, how do headlines impact our psyche, our confidence? Because if you're a consumer at large does not have confidence, that affects the economy. Just take a look at some of these headlines day after day. I'm just going to rattle off an entire week of headlines. So devaluation of yuan stirs global worries. China takes more steps to avoid the sell-off because the market started selling and selling and selling. China's move poses a threat to Canada. Wow, if you're invested in Canada and real estate or oil, you're thinking, oh, well, here's one. Oil patch hit hard as prices reach new low. China's collapse hits Canadian markets. Markets tumble on global economic fears. Oh, then they talked about the entire global reset. Here's a whole page on everything that's taken a hit, from the Shanghai Composite, energy, emerging markets, oil, stocks in Europe, S&P 500, S&P TSX, markets in a tailspin, the sell-off. Oh, and this is my personal favorite, 5 trillion. Is that trillion? Trillion with a T, ladies and gentlemen. $5 trillion lost in a 2-week span. Well, and even the USA Today say jittery Wall Street starts week on edge, etc. And just to make the real estate investors feel really good about themselves, the headline says, Toronto housing overheated, says CMHC. Wow. You know, so you kind of left sitting there going, well, that's really makes me feel good, doesn't it? What's left? So they're basically, if I'm reading the headlines, real estate's going down in the toilet. It's overheated. If I invest in real estate, I'm on the verge of a bubble bursting. Stock markets have gone into the tank, so I can't really sell my stocks and do something. What should I do? And I just want to caution everybody, you know, that's a great example of how not just you, but your joint venture partners or your clients, your customers can get caught up in the hype and the concern and what the media provides us. So headlines are going to continue to create this type of fear-mongering, as I like to call it. Part of it's true. I mean, the markets have gone in tailspin, but here's what you should think about in terms of adding perspective. Number one, what goes down does not go down forever. It comes back up. So the worst thing you do right now is sell or get out because it's going down. It's not. It will recover. It will rebound. In fact, in many cases, just like when real estate goes down, that could potentially be a buying opportunity. Second of all, if just like real estate, whether you're in the stock market or the real estate market, you should be in there for a long term. So you're going to have to get used to riding the roller coaster waves. A client came to me the other day and said, Peter, with what's happening in real estate and with what's happening in the stocks, where should I be invested? And my answer is a properly well-balanced, diversified portfolio. Now, that does not mean stocks, bonds, and mutual funds. What it means is you should have some of your money in your RSPs into the markets, but also some private equity opportunity. Maybe investing in some mortgages, maybe investing in some private REITs that are not traded on the stock market, so that, you know, public REITs went down with the market, private REITs didn't. So there's a lot of opportunities to look at diversifying your portfolio to protect yourself against some of the stuff I just mentioned. But that requires a proper analysis and a proper review and an understanding of what's really truly available out there. So be careful when somebody says to diversify, make sure you're getting the proper advice and understanding what that truly means. So that's this week's Mortgage Minute. Please book a consultation. I'm happy to do an analysis of your current situation, whether it's stocks, bonds, real estate, or private equity, we can look at all that for you and help you make an informed decision. That's the Mortgage Minute for this week. Thanks a lot. Have a fantastic week. We'll talk to you soon.